Vincenzo'S Gold Crypto Investing. Bell notification, like the channel, subscribe, and share to get that education and information you need in a probability-based, super simple, easy way to get asset acquisition to heighten and enhance your standard of living in your portfolio, right? And the Federal Reserve yesterday has gold nearly hit $2,000 an ounce, and it's approaching its all-time high because the Fed has now bailed out a couple of banks. If we look at the gold chart, it's been on a massive rally the last month. For gold, up 10% in a month. It's a huge, huge month. The last year, you can see it's up 9.21%. Or year to date, the last year, it's up 4% because it was in about a year and three-quarter consolidation to the downside. You can see there from where it double topped its two all-time highs, and now we're approaching there. But we look like we're trying to do it with some more fortitude to the upside. And the recent rally is all because the Fed started bailing out banks that went belly up, which means the Fed is not quantitative tightening anymore if they're bailing out banks by the hundreds of millions of dollars, right? And then they only raised interest rates a quarter basis point. And remember, my forecast has been through this whole time as we headed into 2023, the rate hikes would start to dial down. And now we only got a quarter basis point rate hike, right? And what does that tell you? That tells you the Fed's getting scared. The Fed's doing a soft or a silent pivot. Just like they used to have the ninja loans, this was the ninja pivot. They pivoted without saying we pivoted, right? Because they're doing quantitative easing, but they're not calling it quantitative easing because they can't fight inflation. It's impossible, right? So what you have with this now is we had that big run up like we were calling for, and now we've consolidated like we thought we would do on a sharp reversal as we got near the 48 to 52 cent level, right near the area or just into that blue trading area. Now we've consolidated, and you can see the moving averages have caught up to the price now, and we've consolidated by bouncing off of the 200 once and then trading in between the 200 and the 50, and the 50 is over top the 100, and the 100's over top the long-term moving average. But if you notice this in the 30-minute time frame, the short-term moving average is trying to cross through the longer-term moving averages, start going from being above them to below them, which would signify more bearish action, right? But we bounced off the 200-day again, and that's what you need to stay above in the 30-minute time frame if you're trying not to have a full consolidation all the way down to the at least the 41 cents, but more likely about the 40 cents, right? So that's what we're trying to hold in this little pattern right here. And this is still a bullish consolidation right now, because if we zoom out to the 3-hour time frame, see where we're consolidating, we're still above the old breakout zone. And as long as you're above the old breakout zone and you stay above the 200-day moving average in the 3 and 4 hour time frame, that's a bullish consolidation. But if you break back below the old breakout point, which was, you say, well, Vincenzo, what the fuck? What the fuck? This is the old breakout point, Vincenzo. And I say, oh, that's a great question, my good subscribers and beautiful followers. The old breakout point was the symmetrical triangle. And that right now is right down here, right about where the 200-day moving average is. That overhead blue line that's coming from top left to bottom right, that's the old symmetrical triangle, right? And that's what I'm talking about here. And if we go to the daily time frame, see that? See that beautiful symmetrical triangle right there? That's what we're talking about. And that is what you got to stay above if you don't want to fall to a huge breakdown, because if you fail to hold that, that signifies this was a fake out to the upside, and you're going to have a huge hook nose to bearish reversal, and you got some very, very low levels. If that's the case, if you can hold those levels, you can try to pump higher and get it in between that 51 and maybe even as high as that 70 cent range. But that is to be determined based upon future price action, based upon what kind of support we get, what kind of levels we can break, and the momentum and the volume that we can generate, right? But we're going to keep an eye out on that for you. We're going to get more into the Federal Reserve and what they do a little bit later on tonight. And then if we take a quick look at the Bitcoin price, the Bitcoin price is consolidating, similar but different. We're getting an up and sideways sneaky consolidation with falling volume. after the most recent pump, and almost tagging a major resistance zone, which is the VP volume indicator at 29,000. And you see how we're doing that snaky consolidation? We've seen that kind of consolidation before in Ethereum when it's ran into these zones, and you have a big, big fall initially, even if it's going to come up quicker. So that's what we're going to watch out for with the Bitcoin price, right? What does it do right now? Can it hold the shorter term moving averages and the 3 hour time frame? Right now you're on the 50-day moving average. Can you hold the 50-day, or are you going to break below the 50-day and you're going to start to come on down closer to the 200-day like we have drawn out there? And then you got to try to hold that $24,000 level with the 200 days to remain bullish, or you're going to get rejected, and this is going to be nothing more than a nice 3 to 4 week pump, and then you have a massive, massive reversal, and you trade to the downside. We'll keep you up to date. If we look across the board, Ethereum, in the 5-day, we've been up, we've been down, we've been consolidating, right? Same thing with DOGECOIN, hasn't really got anything. We had a nice big pump in XLM, and now we've come back down. We had a nice big pump in Algo, and we gave it all back. We had a nice big pump in whatever that is, Gala, and actually we've been steadily going down, sideways, at ADA, and we had a big pump, and now it's starting to move it back. And then one more thing I wanted to talk about that I feel is important this morning would be the banks. Banks have been having some issues, and you can see Wells Fargo is down 4% between yesterday and more pre-market today. Citigroup is down 3%. Bank of America is down almost 5%, better than 5%. JP Morgan's down a couple of percent. SDD obviously went bankrupt. Now they changed the shit to SIDD, which is going to be some sort of subsidiary of the bailout and the new company that comes back online. Credit Suisse, it filed bankruptcy essentially. They're down to 87 cents. And then Comerica is having major problems. They were down 9% yesterday. So we're going to keep a major eye out on this. Like, subscribe, and share. Peace.